Good morning. This is Japanese Economic Review Channel. Welcome to our briefing on the historic market events of June 3, 2026. Today, we analyze a landmark day where both Japanese and US markets achieved unprecedented highs. We will cover the synchronized records across major indices and the specific corporate catalysts that drove this extraordinary momentum. Yesterday was defined by three pivotal trends. First, the Dow, Nasdaq, Nikkei, and TOPIX all set simultaneous records. Second, the AI and semiconductor catalyst triggered aggressive buying in tech heavyweights. Finally, we observed a structural divergence, where record-breaking momentum in the prime market stood in sharp contrast to profit-taking in the growth segment. The global rally was sparked by the April JOLTS report, which showed 7.61 million job openings, significantly beating the 6.86 million expectation. This proof of U.S. economic resilience fueled a 5-day win streak for the Dow and a 9-day streak for the Nasdaq. Megacaps like Cisco Systems and Apple led this charge as investors rotated heavily into AI-driven industrials. In Japan, the Nikkei 225 skyrocketed by 1,667 points to close at 68,402, a historic all-time high. The TOPIX also surged to 3,996 points. Massive trading value of 12.27 trillion yen on the prime market validates this momentum, confirming that institutional players, not just retail traders, are driving this surge. The rally showed impressive breadth, with 65.1% of tracked stocks, over 1,000 companies, advancing. This high participation level, backed by heavy market volume, suggests a healthy, sustainable upward trend rather than a thin, speculative move. It indicates a broad-based revaluation of Japanese equities by global investors. Looking at the intraday chart, the Nikkei decisively shattered the 68,000 barrier for the first time in history at 1:06 p.m., peaking at 68,786. While there was some stabilization toward the close, the market maintained robust forward-looking expectations, supported by steady, accelerated inflows into large-cap semiconductor stocks throughout the afternoon. Sector-wise, 25 out of 33 industries rose. Non-ferrous metals led the way, with Sumitomo Electric and Fujikura seeing gains of over 10%. Machinery and precision sectors, including Advantest and Tokyo Electron, were also major contributors. Conversely, defensive sectors like pharmaceuticals and parts of the information and communication sector faced selling pressure. We are seeing a clear rotation of capital. Investors are moving out of domestic-focused telecommunications and defensive pharmaceutical names like SoftBank Group and Chugai Pharma. Instead, they are seeking alpha in global-facing AI hardware and heavy industries, specifically targeting semiconductor leaders and energy commodities like INPEX. A significant divergence has emerged between the TSE prime and growth markets. While the prime market thrives on the global semiconductor boom, the Growth 250 index suffered its fourth consecutive day of decline. High-profile emerging stocks like Synspective and Timee are experiencing liquidity extraction as capital consolidates into established, large-cap industrials. Strategic corporate moves are providing long-term confidence. Notable developments include ALSOK's new cyber incident support, Umio's achieving the first MSC fishery certification in Peru, and Junior West launching high-speed emergency transport via Shinkansen. Additionally, Nissan Chemical's expansion in India and Yaskawa's new hygiene robots demonstrate a clear focus on future growth and ESG sustainability. In conclusion, the June 3rd milestone was not an isolated event, but the terminal point of synchronized, macro-driven global tech momentum. The three-stage pipeline, starting with U.S. labor resilience, leading to global AI confidence and resulting in the TSE breakthrough, remains intact. The market is now focused on companies that can translate these macro tailwinds into tangible strategic execution. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.